Thanks for listening to the ArtTactic Podcast. I'm your host, Adam Green. Now that we're here in the summer, we have a moment to take a look back at the first half of the art market in 2026. ArtTactic has just released a report highlighting some of its findings, and we're going to get into all the details today. It was really an incredible first half of the year, at auction at least. Nearly $7 billion of art sold, 70% growth over last year, but it's far more nuanced than that. Of course, the art market isn't just about the auctions, and so in this week's episode, we break down some of our key findings in the report, as well as the implications for the broader art market. In this week's episode, we're joined by Tim Schneider, journalist and founder of The Gray Market, as well as Anders Petterson, founder of ArtTactic. Hope you enjoy the conversation. Thanks so much for listening. Anders and Tim, thanks so much for joining us.
Great to be here.
Yeah, happy to be here.
So I'm really excited to break down the raw facts report and what happened in the art market in the first half of 2026. So I think the headline number from the first half year of sales is that global auctions actually rose about 70% year on year to $6.7 billion. What do you think were some of the biggest drivers of that rebound from the last year?
I mean, if I'll start, Tim, you can come in here. But I think one of the things we started to see end of actually last year, second half of 2025 was the reemergence again of single owner collections. So we saw the Carpedes, we had the Pritzker, the Lauder sales that took place in November in New York, and I think it gave a boost. I mean, actually, if we had looked at the first half of 2025, it was all negative until then. Things flipped during the autumn, and I think that sort of carried into the early part of the first half of this year. So obviously the London sales was strong, the New York sales was strong, and again London sales with the Lewis collection here in taking place in June last month set a new record sales for London. So I think the emergence of confidence in terms of supply or consignors wanting to consign to this market, particularly these large single owner collections, has been an impetus. So I think it is still quite, the optics of the market. I mean, it's very much driven by this, we talked about in the past when we published things, the 1 million plus market. Actually, I don't think it even is the 1 million plus market anymore. It's the sort of 5 million or 10 million plus market. Because if you looked at the New York sales in May, for example, the 5 million plus accounted for roughly 84% of total sales. So that sets virtually the overall trend is dictated by these very high value artworks. And the same thing for London in June, 81% was above 5 million. So the market is very much now driven by a very it's a narrow but very expensive slice of the market. Rather than necessarily thinking about the broader market. There is a recovery, and we can come back to that later on, just to talk a little bit about the day sales, for example. But I think the optics and the large numbers predominantly is driven by the return of the 5 million, even 10 million plus markets in the last 6 months.
Yeah, and just to add on some color to what Anders is saying there, one of the things that I noticed in the numbers was that there was a huge rebound for Impressionist and Modern work in particular. That category hit around $2.3 billion worth of sales in the first half of the year. And that is, I believe, the second highest total that there's ever been in a first half of any year dating back to 2015 and barely missed the previous high, which was 2.4 billion. So I think that that's sort of a natural analog to the particular single owner collections that we saw hit the market in the first half of this year. Again, like the Newhouse collection, that in particular, I think was really rich in these sorts of early modern works. And that's, I think a lot of people are really, really interested in. And on top of that, I would also add in that as much as we're here to talk about art primarily, there was also a big rebound in the luxury collectibles side of this, which is another component of the report. So luxury collectibles were up around 25% by value in the first half of the year. They crossed $1 billion, and that's only the third time that's happened in the first half of any of the years dating back to 2015. So again, as we're talking about the health of the auction market, we're more and more getting into this zone where just looking at art in and of itself is not really telling the whole story, and we really need to sort of expand our vision to think about how these other aspects of the field are playing in.
And I think it's also on that, Tim, and I don't know, you probably saw the Heritage auction as well, posting, first half of 1.4 billion as well. So obviously this is moving into the memorabilia, sports memorabilia, trading cards, etc. So it feels quite, as I said, some of the optics is maybe driven by the very top end, but it's quite interesting also to see the volume aspect of side. And Tim, as you mentioned, there's been an uptick in both, the luxury goods in terms of sales. But if you're looking at the online side, it's really also driving 25% growth almost in the online sales of luxury goods as well. So there's multiple things actually happening on the lower end and the higher end of the market.
Yeah, it's interesting. I remember, maybe a decade ago, even longer, auction houses were talking about how they wanted to really diversify into other sales categories like we've discussed, like watches, memorabilia, and really try to engage with their clients, not just on art, but on these other categories. And now it really feels like it's coming to fruition as we see these incredible auction numbers. And one of the main drivers is some of these collectibles and things outside of art. But getting back to the art market, the headline numbers from the report in the first half are really strong. But it's interesting because if you walk around Art Basel or you talk to collectors even or dealers, it feels like there's somewhat of a disconnect perhaps between the findings at the top end of the art market versus the majority of the art market are feeling. I'm curious, your thoughts on kind of a potential disconnect there and why it might be happening.
I think Tim actually kind of raised some of this thing in his comment earlier on. I think the focus has been on the Impressionist and Modern. I think there is a sort of a sense of, feels like it is a sense of flight to quality or focus on quality. I think it's also, which again probably doesn't trickle down to the more contemporary or younger contemporary element of the market. So when you go to a fair, which is largely contemporary works, of course you have some of the major galleries that will have, post-war Impressionist and Modern. But in general, I think there is a slight distortion, partly by these single owner collections, giving it a sort of sense that this is a broad market-based recovery. These are quite rare, well, increasingly maybe less rare, but relatively rare events that's happening, during a year, and in a sense kind of distorts maybe the picture of what's happening on the ground. So I think, in a sense, I'm not sure how much of that wealth that is going into that part of the market, the very established multi-million segment, is actually trickling that much at the moment. Tim, I don't know what your thoughts are.
I would second that for sure. I think that when we're talking about the vibe in the market, as much as I hate to use that word, it's just the parlance of the time, so I have to. But when we're talking about the vibe of the market overall, I think there are very few people who are ever just looking at the auction market in a vacuum. They are always, I think, also taking into account what's happening in the primary market. And as you're saying, Anders, like my conversations with dealers when, especially, I'm not necessarily reporting when I think that they're being the most candid with me. I think that everything that I'm hearing is that for the most part, there's a real struggle happening there. And I'll have more to write and say about this later on in the month. But I think that we're really in a state where looking at auction results at all, and especially auction results at the top end, probably tells us less than ever about what's happening in the primary market. And so that's just one thing I think to keep in mind. The other point that I want to bring up here is about a post that I wrote earlier in the year that was based on another report that ArtTactic did, which is their Contemporary Art Market Confidence Report that came out back in April. And to me, what was most interesting about the sentiment data that was in that report was that in the 10 years that ArtTactic had been producing that report, there had never been a wider gap between how good people felt about the secondary market and how bad they felt about the rest of the economy. And that was just sort of a fascinating finding, that it's not even necessarily about what's happening within the art trade in particular right now, it's also just about this kind of wider economic anxiety that I think you can't ever fully filter out of the way that people feel about any particular market. So whether people are talking about auction, whether they're talking about galleries, whatever, the rest of the world is always creeping in on some level. And I think that the reality is that there are a lot of people who are really unsettled about the state of things on the broadest possible scale. And there's no way to keep that out of the conversation.
Yeah, I think there's really a few dynamics that you brought up that are at play, the primary versus secondary market. I do think there is a disparity in terms of the sentiment of those markets. I think just generally collectors are being much more selective about the types of artists they're looking at and the works they're considering for their collections, whether it's at the top end of the market or even the middle or younger market. Anders, I think it's good to bring, and Tim, I'd love to hear your thoughts as well. But Anders, I think actually an interesting anecdote was sort of the correspondence we had after the May auctions. I was looking around the auction previews, observing the auctions closely, not necessarily from an analytical perspective, but noticing there really weren't a lot of young artists in these auctions. It wasn't that really young artists did poorly. Their presence wasn't, what it has been in the past. And so at first I asked you if you could look into just the day sale numbers, because I thought that might represent something interesting. And then I think you came back and said, actually, the day sale numbers are pretty good. And I said, okay, what about the presence of young artists? And they, weren't nearly as present as they have been in past seasons. And I kind of came away thinking that means, okay, generally people are uncertain about these young artists, the speculative artist markets, and how they would perform at this moment at auction. And so as a result, they're really not going to test that unless they really need liquidity and have to sell these things. I'm curious your perspective going through the numbers and kind of what, if that was surprising, kind of the findings you came away with.
Yeah, no, Adam, I think you triggered us. You triggered us to start actually writing about the day sales market, which I think now we started to do we should have probably done that earlier, because I do think it's probably much more interesting to actually look at what's happening in day sales than the evening sales sometimes, even if the numbers are quite minuscule in comparison. But it was interesting because I think you sort of had a sort of inch that, day sales probably aren't as good as evening sales. But it turned out that both the New York sales was up 44% from the year before, and London sales last week was up 106%, so almost doubling, more than doubling. I think what's interesting there again is that what Tim mentioned earlier on the kind of the focus on the modern and impressionist is actually also now sort of creeping into the day sales. So the numbers are pushed by the sort of similar names, not necessarily work of the same quality, but that's very much in that sort of 250 to 500,000 range is where we're starting to see, where the day sales market is now being quite vibrant. But again, focusing on more established artists. The ultra contemporary, the young contemporary that we've been looking at, there's really been I think we saw like from the peak of the market, if we compared it for the sort of first half, May 2022, it was about 77% decline in actual sales. And also the number of artists are fewer than it used to be. So there's population, but there's still obviously, there's quite, I think a lot of the younger artists maybe shifted more into what we sort of define as the incubator sales, which are these sort of the smaller contemporary sales that are happening dotted around the year. But there's still the population of young artists are still there. The price levels are very different than it used to be. And I think maybe at a more healthy level. But Adam, what was your kind of, I guess when you're working quite closely, and Tim, you probably as well, when it comes to the younger end of the market, what is actually happening there? Because obviously when I look at the auction data, I get very little visibility because a lot of these artists is now kind of slightly edited out of the auction space. What is happening to the career of some of these artists? Are they producing? Are they being supported by the galleries? What's going on in that?
I guess what I would say is that I think, in terms of which artists are showing up at auction, I think that there is tremendously more selectivity about which young artists are actually going to make it into those sales. That's one of the things that came out of my conversations with auction house executives and specialists and just other people in the market over the course of the past 6 months or so, is this notion that there have been kind of two, I would say, complementary forces in a sense, in terms of what we're seeing on that side of things, where on the one hand, and we'll talk about this a little bit later, I think, but estimates have really come down as the market has sort of taken a step back and people have reevaluated. And along with that, there has also been more discrimination, and I don't want to say discrimination, I should say probably more discretion. That's a better word for it, in terms of which artists and which works the houses are even ready to consign. And obviously, there's been a kind of sea change in the conversation around young art and its value. And what we're seeing now is, I think, the effects of a theme that everybody knew was happening, but it takes more time, I think, for these shifts in the market to actually play out in the numbers. I mean, people have been talking about how young artists on the secondary market were overvalued for, at this point, 2.5, 3 years, give or take. And that's not a kind of shift that happens immediately, to go from, okay, everybody realizes that this is a space that has maybe gotten overheated and we should be looking maybe more at historical works or other areas where there's value that maybe isn't being identified previously. And it just takes time for that to metabolize. And I think that now people are sort of seeing the results of a shift in mentality that really began several years ago.
I agree. And I think the problem is really, which we haven't touched on that much, and I feel isn't touched on necessarily enough, generally it's just the primary pricing, the way that functions and how prices, yes, galleries may offer discounts, but the pricing itself on the works, galleries refuse to lower prices. So, and you had so many artists who achieved incredible results at auction. And as a result, galleries increase primary pricing to get closer to those secondary market results. But what happens when secondary pricing comes down? These primary prices are still quite high, higher in many cases, not all, but in many cases, it feels they're higher than market rates. So it becomes sort of difficult to sell the work on the primary market. And I think everyone's trying to figure out how that's going to play out, where each of these artists' pricing will fall. And I think we'll maybe start to see more of these younger artists at auction in the future as more and more collectors sort of accept the true market value of each of these artists' works, which isn't always reflected in primary pricing. I want to shift a little bit to online only auctions, which is so funny because it's something I feel like on the podcast, at least, we haven't talked about in years, but really since maybe COVID, when so many sales occurred that way because they were forced to. But this is, of course, an initiative that the auction houses have been investing in and pushing on for, over a decade now. And an interesting finding from the ArtTactic report is that the online only auctions reversed a 4-year decline, and we saw increases in both the number of sales as well as the volume of lots sold. What dynamics do you think are in play here that's resulting in this shift?
I think there's probably a number of things. I think first of all, the range of sales that are now, many of them, I think it was 190 sales last year, which was up on 146, in the last 6 months, which was up on 146 from the first half of 2022. So there's been a significant amount of the number of new sales, and many of them are in the luxury category. At least 40% of them are in the sort of luxury, in the luxury element. So I think there's the formats of sale. I think first of all, people are getting pretty used to. We don't even necessarily talk about online sales as something specific anymore. I think there was this sort of novelty of, I guess, having this sort of online experience during COVID. That's pretty much become the kind of just the normal way of doing business now. I think it works really well for certain types of sales. I think it's not like an either or. I think, the big evening sale serves a purpose if you want to, at the higher end of the market. But for the jewelry, for the watches, even for fine art, we're starting to see more and more of these online sales. I think as a consumer, and clearly what is also it's interesting because we looked at the sales rate or sell-through rate, and it's up in almost 93%, which is up from 87%. So actually, it's not only that it's going online, it's selling well, which typically means that there must be competition out there, which suggests maybe that there are more and more people actually using these channels and are engaging with the auction houses through that, which can only be a good thing. if you think about in terms of building more audiences coming into the global collectibles market in general. So I think there is there's probably a mix of kind of a curatorial aspect in how they curate the sales and make it attractive, and then I think it's a sort of the art world getting used to transacting online after, the first Sotheby's had their first auction sales with, Amazon and eBay back in late 1990s, early 2000s. I mean, that's 25, 26 years ago.
Just to underscore one of the points that Anders made here, because I think it's really important. If you're looking at online only sales, luxury dramatically outsold fine art in the first half of the year. Luxury collectibles sold $192 million worth of lots online, and fine art only sold 136. So that's, Anders, I can't calculate this in my head. Was that like a 40% difference between the two, give or take? Something like that? So that in and of itself, I think, is really noteworthy. And I think, as also Anders was alluding to, there's somewhat of a cultural difference almost, I think, in the way that buyers evaluate luxury lots online. Like, ultimately, it's just shopping at that point. If you're looking at jewelry or looking at sports memorabilia or whatever else, I think that there's less of a kind of mental hurdle that buyers go through when they're looking at luxury collectibles in an auction versus maybe equivalent items just on the primary market, if they're just on a website or whatever else. That being said, I also think that the stigma that used to exist around online only sales of fine art has really diminished. I'm not even sure that it is a stigma at this point. I think that there's definitely understood to be a difference, but it's a difference in the same kind of way that we understand that the lots that are going to appear in an evening sale are going to be of a generally higher quality or greater rarity than what you see in a day sale. I think it's just sort of a stair-step process at this point. But there is some genuinely prestigious, interesting stuff that's offered in online-only sales. I mean, just to use one example here, we were talking about single-owner collections earlier, and there was a dedicated online-only sale from Marion Goodman's collection through Christie's. So I think that in and of itself sort of signifies the idea that anybody who thinks that anything that's in the art realm that's only being offered online, that's somehow lower quality stuff than you would find elsewhere. I think that idea is really sort of antiquated at this point.
Yeah, I think that's a great example you brought up about the Marion Goodman. And it's interesting because I think there was a stigma initially from a consignor's perspective. I need to get my artwork that I'm selling into the live sale. I don't want it to be the online sale. There's not going to be as much attention. It won't do as well. I think in addition to what you both said, I feel, especially from my conversations with auction houses when potentially consigning works, unless you're selling multi-million-dollar artworks, you don't have, or you have an incredibly strong relationship with the auction houses, you don't have as much leverage to make that case and say, oh, let's put it in, the day sale. If it's a lower value work, they're going to push back and say, no, we need to put it in this online sale. And because at the end of the day, the auction houses, they only make money if the work actually sells, which leads to my second point. I think in this current market, they're also pushing more on more conservative estimates. I don't necessarily have the data that supports that. Anders, maybe you have some data that could support that. But anecdotally, I feel they're pushing and wanting lower estimates, wanting lower reserves to increase the probability that the work sells so they can actually make money off of that transaction. And from a consignor's perspective, especially if you have something that is maybe not as desirable in the market, you really don't have much of a choice. You either go with the sale they recommend or you're not selling it at all. And so I think those two things are also leading to why online sales are producing better results than in the past.
Talking a little bit about that pricing aspect, maybe that's your next question, Adam. But I think it's interesting to look a little bit about, I think that the pricing in general has I think is kind of coming in line with more expectation. And you mentioned, do we have any evidence of that? I mean, I think, one is the sell-through rate, but that's not always. I think it's also looking at the price to estimate. So basically looking at, where does the hammer prices lands in vis-a-vis the mid estimate. And I think what we have seen in this part of the year is that it's definitely been creeping upwards, which suggests that there is a more balance, I guess, between sellers' expectations, if we assume that the estimate somehow reflects that on at least on average, and buyers' willingness to pay. And I think that, those things seems to be falling more in line in the first half of this year. And
so I want to move to each of the auction houses, which we do break down in the report. And So Sotheby's, Christie's, Phillips. I'm curious, were their performances relatively consistent in this first half of the year, or was there a difference in how they did? And I'm curious also, Tim, do you feel like maybe they're employing different strategies at the moment, or do you feel like there's a consistency in what they're focusing on and what they're trying to do with their sales?
I think that the amount of real strategic difference is maybe not huge at this point. I mean, this is just my perception, sort of reinforced by reporting that I've done and just the numbers that are in the most recent ArtTactic report. But from what I can tell, Christie's is still really just trying to stay in its lane as much as possible. There was a big story that I wrote last year for the Business of Fashion that was examining the kind of grand strategic evolution of Christie's versus Sotheby's. And one of the things that Alex Rotter told me when I talked to him for that story was, at the end of the day, I just want to sell art. I mean, I'm paraphrasing here, but the idea is that art was really there at the center of Christie's strategy, and that was going to be the plan going forward. Didn't mean that they weren't going to do other things on top of it, but at the end of the day, that was really the core proposition that they wanted to put out there. And I think that what we've seen in the first half of this year really just, again, reinforces that idea. I mean, they were, I think, not to say that Sotheby's didn't also have its fair share of high value single owner lots and big moments, but especially, again, with Newhouse, with the Aggie Gund works that came up, Christie's, I think, really ended up more at the forefront of the kind of apex of the fine art offerings, at least in New York. And that, again, is pretty much on track with their history, or what they've wanted to be their history, I would say. Sotheby's has, I think, been more diverse, maybe a little less traditionalist in their approach. And one of the stats that kind of backs that up to some degree is that they really made big gains on the luxury side this year. They were up almost 30% by value year over year compared to the first half of 2025 within the luxury category. And that's a really notable thing. They also really amped up the number of online-only sales that they were doing. That went from 79 in the first half of 25 to 106 in the first half of 26. And I'm not going to speculate on why exactly they made that move or which items necessarily were driving that or whatever, but it is the kind of thing that you look at. And if you're trying to find big picture differences, that is one that sticks out. The last thing that I will mention is that, again, to go back to the luxury side of things, that was really a huge part of Phillips' results in the first half of the year. If you look at the numbers, the majority of Phillips sales at auction in the first half of the year were luxury. It just barely, it was, I think, 50.5% by value. But that's just, again, a kind of checkpoint that's worth noting. When it tips over into the idea that Phillips is primarily being powered by luxury sales, with watches being really the centerpiece of that, I don't want to say it's a sea change necessarily, because Phillips has been moving this direction for a while. But again, it's just another kind of anchorage point almost when we're thinking about how these gigantic businesses are behaving and what they're thinking about and where they're finding value and demand in the current landscape.
I agree with Tim, and not much to add. I think that maybe some of the differences, I mean, just very recently here in London, is that obviously Sotheby's and Phillips has decided to kind of go for the evening sales. Christie's tends to now postpone or do this in October instead, which, I mean, obviously now it played into Sotheby's advantage with the Louis collection, which added quite a significant chunk to London's sort of kind of market share for this year. But otherwise, I don't think there's much difference in terms of the numbers. They tend to now sort of virtually neck and neck, as I said, in terms of the actual outcome. But their focus is slightly different, as Tim mentioned. But I think I agree also on the Phillips. I mean, Phillips did interesting to see how much, which I think it was quite revealing this first half, how much of the business is actually driven by luxury, which, I think, we talk about the auction houses, we talk about fine art, but it's almost impossible now to not talk also about the luxury collectible sector, because it's now becoming a very significant part of the business, and also in terms of, I think, bringing in maybe different types and new types of audiences into the auction houses that might, in the future straddle into the fine art or maybe not.
Yeah, it's incredible to see the auction houses respond to the increased demand in luxury and really do what they do. If there's a market, they are, right there to be the marketplace and to get involved and facilitate a lot of these transactions. So before we end the episode, I want to ask each of you, what are your thoughts as of course, we're in the summer break of the art world right now, and things will kick back up in September. I'm curious if you have some insights or thoughts on what the second half of the year might look like. Do you feel it'll be similar to what we've seen in the first half, or do you think there's a possibility we could see a big difference?
I think, again, coming back to the survey that Tim mentioned that we did in March, which is the sort of last one, we actually are about to launch another one this month. We might see what other people are thinking. I think what was interesting there, just in terms of the outlook, was that I think there's a sense that the market will consolidate. Again, I'm not talking about from a personal perspective, but from what the survey were portraying, a kind of a consolidation into the second half, meaning that we're not necessarily going to see the sort of 70% growth in H2 on the year-on-year. But I think that is also bear in mind that the H2 of 2025 was actually a pretty good year. We had the Pritzker, we had the Lauder, we had the Carpedes sales. So to have the same kind of growth rates, year on year, I think it's going to be difficult to kind of maintain. The H1 of 2025 was not a great first half. So we're comparing a very strong first half this year with quite a weak first half last year. So as we're now moving into and starting to again comparing season on season, I think, the second half of last year was a very strong year. And I think, the market probably, if might be lucky to manage to kind of get to the same levels. So I don't think we're going to see, as I said, the same overall growth. But I think the positiveness, I think we're ending the season on a relatively a positive note. People are worried about, I think, geopolitical, but I almost like we're starting to get a little bit immune. We've been worried about this for now a very long period of time, and it comes to a point where people are just saying, well, I can't live like this. I can't go every single day just be worrying about things, and I need to get on with my life. So I think there's also a sense that we're getting so used to this uncertainty, which I mean, and there is wealth out there, and it's plenty of it, and if it's willing and feel confident to spend, and I think it probably will continue.
I would second that. I think that one of the things that I've really come to believe over the now 20 years that I've been working in this industry is that the amount that these kinds of geopolitical feelings or worries actually trickle down and affect the day-to-day of what's happening in the art market is really overestimated. I think that there are, aside from these kind of huge shock moments, if there is another great financial crisis, something of that level, then yes, I think that you're going to see a real issue at the top of the auction market, even potentially. But barring that, I think that, as Anders is saying, we all just sort of have accepted the idea that we live in hell. And I just don't think that it's really knocking anybody who has a tremendous amount of money to spend off of the idea that, oh, maybe I shouldn't actually blow $50 million on this Impressionist piece that's coming up. I just don't think that that's the way that most people are going through the world at this point. So from that standpoint, I think the most interesting aspect of the second half is going to end up being what happens in the discretionary consignment market, because again, estates, for the most part, nobody can really control when those come up. There's always the 3Ds of death, debt, and divorce, as we all know. But the fourth D, which is discretionary, is really, really important to this too. And we've now had another season where some real high value discretionary consignments went up and did well. The Lewis collection being, I think, a really, really important example of that. And the art market at the end of the day, whether you're talking about the buy side or the sell side, is very much a follow the leader space. And now that I think that potential sellers have some data that says, even if I don't need to bring this to market, it might still do really well, that has the potential to start to unlock a portion of the market that hasn't been as present over the course of the past few years. How much of that ends up really changing things in the second half, we'll see. but it's definitely something that I'm keeping my eye on.
Yeah, no, I agree. I think there's definitely more confidence from a potential consignor's perspective, especially at the high end of the art market. And I think from a buyer's perspective, generally, I think there is, people are feeling good. They're just being quite selective and disciplined. That FOMO feeling has completely, or for the most part, disappeared from the market. So people are taking their time, looking closely, figuring out the small list of artists they want to pursue. But if they see a great example by that artist, they have no problem going for it and buying it. And I think that mentality will persist in the second half of the year. Tim and Anders, thanks so much again for coming onto the podcast. Really appreciate helping us recap some of the takeaways from the first half of the year in the art market. Tim, if our listeners want to follow you, where can we find the gray market and to follow you on social media, and tell us maybe if there's a piece or two you're working on that you can preview for us?
Yeah, so the main place that you can find me week in, week out is The Gray Market, which is now on Substack. It's thegraymarket.substack.com. That's gray with an A. It's the American spelling, not the British spelling. And you can find me on Instagram at @the_gray market. In terms of what I've got coming up, the next big thing for the rest of this month, I guess the next two major things I have going, there will be another post that I write using ArtTactics data, and do that every month. And then I'm also doing the next in what I've dubbed The Gray Market Investigates, which is my monthly series of extra deep dives into topics of importance. And this one is going to be a mid-year gallery report. So that will be out there by the end of this month.
Yeah, sounds interesting. And Anders, tell us what do we have maybe coming up? Can you tease a report or two for ArtTactic that our listeners can be excited to check out when it comes out?
Yeah, we just actually, while this podcast was on, I think we just launched the luxury collectible report, which is a sort of subsection of the raw facts, so looking at the overall auctions, and we basically took out just the luxury aspect of that. So that went out today. We're going to have a look at the old master market a little bit later in this month. I think it's also an interesting, that's not often get that much attention. There's been some great sales and interest actually from buyers in our end, maybe clients on the slightly younger end of the sort of age spectrum are showing interest in old masters and old master drawings. So we're going to do something there. Then we're also looking at the fractional ownership market, which we do on an annual basis. Revisiting what's happening in this whole thing about art as an investment and buying fractions in art. So hopefully that will also give you an insight into what some of the developments in that space. And for those of you who might have received a survey, it will be around Outlook, and we are aiming to publish that in the early part of September, just when the art world is coming back from summer holiday. So yeah, no, and I must again, I just I want to thank Tim for the collaboration we have. I think it's great to have him coming in as a kind of a third party looking at our data, often through a super interesting lens, allowing I think the data to build a slightly different narrative and the different angles. We are often very neutral in the way we report, and a bit lacks maybe sometimes some flair. So they have someone coming in like Tim to elaborate on this. I think it's super helpful for our audience and also hopefully for the art market in general. So thanks, Tim.
I appreciate that support, Anders.
Well, thanks again both for coming on, and have a great rest of the summer, and hopefully talk to you both soon.
Excellent. Thanks, Adam.
Take care.
Thanks.